Good afternoon, everybody. This is Jeff Scott, and welcome to this week's Weekend Review. For those who are new, welcome. For those that are done this before, appreciate you coming back. I plan on continuing these as long as I have interest, so please let your friends know. And feel free to drop me emails to let me know that they're worthwhile and what you'd like me to change. Those that were on last week know that I've tried to trim down the format a bit. I'll cut out most of the upfront presentation, and I'll jump right into my review. For those who haven't been here, I am not a broker. I don't own a software company. I'm a semi-retired physician who has been trading for a long time. I'm a big fan of top-down investing, and I use these broadcasts, really what I do on Sunday, to review the markets anyways. So I thought I'd start talking out loud instead of just to myself, which sounds a little bit paranoid, and record them and then put them up on YouTube and a few other places. So again, welcome. As usual, the disclaimer, educational purposes only. This is for education. Don't take these. Anything I do for advice in the spirit of anything else. I'm a doctor, not a broker. Most physicians lose their money, and I'm not affiliated with any specific program. So anything that I show you are things I've actually paid for myself, so I hope that eliminates some of the bias. But you'll see I'm very biased towards highgrowstockinvestor.com as the tool that I like to use, and hopefully you'll see why. That I think it's, if not certainly one of the most powerful tools available, especially for the individual investor. Now, I use a lot of different things. If I was to end up on a desert island that had high-speed internet access, now that kind of makes absolutely no sense. I need a real-time trading program, whether it's TradeStation or Thinkorswim. I need something to do analysis in. I like aftermarket to use HTSI. EdgeRater, a lot of help as well. Seasonal analysis, which I'm a fan of Magenta Trader. And much of the things I talk about today, especially things that you may not have heard before, like bingos, bangos, bongos, eurekas, phoenixes, are things that I've learned from or with Ian Woodward and Ron Brown, Woodward and Brown Investing. Just very quickly, when I talk about things I'm interested in buying, you don't know what my time frame is. Am I a swing trader? Am I day trading? Am I position trading? All I'm telling you is I'm identifying stocks that look attractive, and then how I do things is I'll watch them, and if they meet other criteria, so if I want to go long in a specific stock, and if the market is going up, if the sector is behaving, then I might look at a specific stock that I find tonight. So just because I say I'm putting on my buy list doesn't mean I'm going to buy it myself on Monday, only if certain behaviors appear. I always do top-down investing, which means I'll look a little bit at last week, then I'll start to look at where the market is today, look at what the strongest sectors are, and then within that, the best stocks. Do a couple of shortcuts, perhaps integrate other programs, look at a couple of stocks at the end, and I probably will be done within 30 minutes from now. Last thing to comment upon, the next high growth stock investor meeting, they're twice a year. Ignore these dates. It's around March 24th in Palos Verdes, California, and just an outstanding meeting where Ian looks like he'll be doing another one. Him and Ron just do a great job. There'll be outside speakers, including myself. And the website here is highgrowstock.com. On the website, you can get, I think it's now a 30-day free trial just by clicking here, no credit card. So everything that I'm going to demonstrate tonight, you can do on your own computer. And there's also under reports, some free weekly reports from Ron Brown. And under blog is Ian's blog, which is outstanding. He likes to likes to show some of the users that he gets from outside the U.S., which I think tells you a little bit about how impressive his blog must be. This talk about impressive. I'm sitting. It's not as pretty today because it's kind of foggy, but this is actually the view from my home office of the Hudson River. I'm looking downriver, New Jersey over here, and it's kind of not a bad place to sit. My room is like a fishbowl. But fortunately, it's on the 34th floor, so nobody can see in as easy as I can see out. One of the things I like to always check is get an idea of how the market performed. And I look at a lot of different things that I put together during the week to to try and get an understanding of what I think the market's doing, where the strength is. One of the things I look at, let me show you this, is I look at a group performance analysis. What the GPA is going to do, it's going to show me what worked and what didn't work last week. And as you'll see over the next 30, 40 minutes, I have a lot of different watch lists that I look at. So if I look at the week last week, and I changed how I'm calculating. I'm not going to start at the close of Friday to the close of this Friday rather than the open on Monday, because there's some skewing of results when there were gaps. So basically, so assuming I was able to buy stocks in the various lists at the close of the market on Friday rather, and I kept them the full week and sold them again this Friday at the close. So that's artificial. Obviously, you're going to buy them at the open, probably not at the close. You're probably not going to get, you're not going to wait until the last trade of the day. So from a hypothetical perspective, I look down here to find the S&P 500, and I see the S&P 500 was relatively flat for the week, down 0.32%. From my perspective, the market had some major swings, and I actually had a pretty good week. High growth stocks were down 0.2 on the HGS 100, down 0.86 on the IBD 50. And that confirms that our type of stocks from high growth stock investing were not the ones that were leaders this week. If I look at what was the leaders, first of all, I had, as I said, a pretty good week, which makes up for last week where I underperformed. But my holdings were up 2.25%. Why? Because I made a comment on the board Friday about China, and that appeared to be making a move. So I made a bet, which I've started to hedge and close out, that China was making a recovery. And for me, that means coal or copper, and I'll show you where my leader stocks were for the week. I also put another call out on a area which had an interesting day. Bought at the low, sold it, and then it came back down to right about where I bought into it, a little bit below it, and I got some calls. And so interesting to see what that one does this week. I'll take a look at that as well. If you look overall, flat market, pretty much a 50-50 split of what was winners, what were losers. It's nice for me to see the bears searches start to end up back on the bottom again. When they're leading the market, that tells me you have a lot of things that would junk off the bottom. I also think we've got a skewed scenario here where people are selling their winners, and that probably, because of the tax changes, and that may have something to do with the apples and some of the others that are getting trashed that have been big winners. My buy watch last week overall was up 1.31%. So I like it when I outperform the S&P 500. In fact, relative performance is great. I always like to look at how I compare to the standard. So the other thing is, let's take a look for a second at EdgeRater, also to get a sense of where the market is. Those who have been here before, EdgeRater takes Bollinger Bands and divides up the space between the top and the bottom into 10 slots, so that if this is a upper band, this is the lower band, the first band is between 0 and 10, then 10 to 20, 20 to 30, and so on and so forth. And if you look at where a stock closes within the Bollinger Bands, it can give you an idea of the health of the market. That 0.5 being the midline, when more than 80% of stocks close above the midline, that's a healthy market. When more than 80% close below the midline, that's a bearish market. In a bull market, stocks tendency to jump between the upper and the middle, in a bear market between the middle and the lower. When you get many stocks above or below the band, since those represent about 5% of the time, not 95% of the time, you're likely to see a recovery or a reversal and pull back within the band. So I want to see where the stocks are, and also look for a scenario where I have a lot over or undersold. And what EdgeRater does, it does it for me automatically, and it shows that 2/3 of the stocks, give or take, are above the midline. And when I look at the amount of oversoldness, very few stocks are above the top band or the lower band. And even though there clearly is a shift to the right, there's still a healthy number of stocks, and I say healthy with an asterisk, that are below the midline. Why do I mean by that? Because if you go back, let's see if I can find a time that was really overextended. This is overextended bad. 86% of the stocks were below the midline, but more importantly, 22% were below the lower band. Another 22%, 23% were in the lowest 10%. And when you get so oversold as this, one might have expected a recovery. And we'll remember this date, December 14th, and just get an idea of whether or not how the market has performed from then. Clearly, there was very few stocks in the upper part of the Bollinger Bands, which has changed by now. So the week that was a, as I said, relatively flat week. Let's take a look at what the market is doing right now. Now, in HGSI, and I changed my screen size for these programs so everything will appear like it doesn't open up the right way. And then, of course, after I change my screen size back, I'll have to redo everything, but that's okay. What I'll look at is Woodward & Brown user groups, market indices, top-down investors. For those who haven't been here before, this is really looking at heavily weighted towards the last 3 to 5 days, but really looks over 2 or 3 weeks performance, purely technical, which means everything is based upon price and volume. The combo rank puts a little bit more weight towards recent than later, but again, it's all technical. And where was the strength in the market as it ended? The transportation. Gasoline, it's kind of interesting to see transports and gas. I think we'll see that transportation was led by airlines. The VIX made a big move. And the market, you know, you can see was down a little bit for the week. You can see down near the lower parts. And we'll take a look at several of those. If you look at a 5-day performance, the VIX volatility led the way, followed by gasoline, and that will show up in some strength in refiners. And if you look at the losers over the last 5 days, silver, interestingly, silver and dollar and gold, you'd expect if the dollar was down for silver and gold to be up. So that's kind of an interesting picture. So let's take a look at several of these. Let's start with the NYSE Composite. I like the NYSE Composite because it's a large index of many different stocks of different sizes, and it's a nice way to get a sense of what the market is doing. So for those who've been here before, excuse the next 12 to 15 seconds, these are momentum indicators as well as accumulation distribution. The high jump measures how far a stock or an index is extended from its major moving averages. So you can see that when it gets to the top here, it has a tendency to go sideways or to pull back. So that's been a very useful, for me, tool for knowing when something is overextended. I use an 8-day exponential, referred to by Stephen Bigelow and others as the T-line. I like candlesticks. The green is a 17, the blue is a 15, the red are 200-day simple moving averages. These are both volume, and I have repetition because sometimes you can't see them below some of the other signals. And these are additional momentum signals, and blue is good and red is bad unless you're bearish when I flip around the answers. All right, so I look at the NYSE. Now if you think about it, if we go back a couple of weeks, I was kind of talking about, had to get above the 200, concerned that they might bounce between the 200 and 50. And what we've seen is some really positive developments occur for the bulls over the last couple of weeks. In the NYSE, you've got, that's not what I want to do. Hold on one second. I got to reset some of these things. You can see it in 17 period times from the low here to the high, from a red candle high with a shooting star and pull back down to the 8-day exponential. You had a 7.4% move in the NYSE, and since that high, it's pulled back about a little bit less than 1.5%. So you've had a nice big move and a pullback to the 8-day exponential, which might be a place that we see it bounce from. We'll have to see. Clearly above the 50. In fact, if you look at the way the moving averages have lined up, the 8's above the 17, above the 50 is above the 200. and that's about as pretty it's been in a long time. So some weakness. We're now going into a bullish time of the year. I'm not so bullish when I think about fiscal cliffs in Europe and everything else that's going on. But frankly, I'm kind of intrigued by what I see here. If I look at, take a look at the NASDAQ, not as exciting. In fact, much less exciting than what we saw before. And that the NASDAQ has got a nice squeeze occurring here where all these major moving averages have come together. And even though we got above the 50 for a couple of days, it looks like we failed there. So the NASDAQ looks like it might be failing. And if we fail here, that would be something that would make me worry about taking out the lows. So I'm hoping we heal very quickly on the NASDAQ here, and that as a result of that, we get back above the 50 and the 200. If not, that's kind of a bearish looking chart. If I look at the S&P 500, one sees somewhat in the middle between the NYSE and the NASDAQ, and that it's pulled back but right at a squeeze of the 8, the 200, the 50 and the 17-day moving average, and we'll see if we get a bounce there. So perhaps both the NYSE, the NASDAQ and the S&P 500 are in areas where we might expect in a short period of time to get a bounce. But we really, I guess Ian sometimes calls these a shootout at the OK Corral. It can go either way from this point. It'll be interesting to see what happens. I often look at the S&P 1500 because it's a mixture of big, small, and medium, and it looks just like the NASDAQ does, so I'm not going to spend any more time, where it's sitting right on a squeeze of its major moving averages and is pulled back to the 50-day moving average. Mentioned that volatility was up 6% for the week. Problem with volatility is every time it puts its head up, it gets swatted down. Now, last time it did this, I said it will run up to the 200-day moving average and pull back. And it did, and it's going to probably try and run up again. We're going to have to break out of this, test it, and continue to move up. And you can see back here, it failed the retest. It's really failed the retest each time it's tried to get up there. So stuck below the 200-day moving average, which has been in a decline, and the volatility is quite low. Look at gasoline, and we'll talk about refiners. They're one of the strengths in the market. And one can see clearly didn't do much in the beginning of the week. Had a pop on Wednesday, pulled back on Thursday, and closed the week on the high of the week. Maybe has a little ways to run before it gets some resistance with that 50-day moving average. You'll notice down here on the bottom, this blue indicator here, that's called the kahuna, and that reflects the big day in price movement. And something that would suggest that this is a, could be something to watch with gasoline. And gold and silver, and then we'll move on. Gold is sort of trapped under this blanket here called the 50-day moving average, and looks like it's just living between the 50 and the 200. All the moving averages are pointed down. I don't totally get it with us printing dollars. Banks across the public banks or the national banks across the world having to print dollars or their own currency with this slowdown economy. One would think that gold and silver would be going up, but if you own any gold stocks, you know that's not the case. So gold sort of stuck here. It had a little rally up and then pulled back on Thursday and Friday. And silver probably looks similar to that. And again, pull back on Thursday and Friday. I mentioned the dollar, and we'll just look at the dollar week as well. The weak dollar has, over the last several months, years, the weaker the dollar, the stronger the market, and this dollar is pretty weak. probably get near a point where the dollar likes to stage a reversal. And a strong dollar would be negative for gold, silver in the market. And it's kind of interesting in my mind to see the dollar weak at the same time that gold and silver is weak. All right. So that's my picture of the market. So just to sum where we are, was a relatively flat week in the markets last week. You've got the NYSE still above, nicely above its moving averages in the right order, but everything else, let's take a look at the Dow real quick, suggesting that they're not as strong and suggesting that this will be an interesting test this week to see if they can get above their major moving averages and hold. And the Dow looks a lot like the S&P 500 and the NYSE where it's pulled back to the 50. So this is clearly a very, very important place in this, as I said, the shoot out of the OK Corral. And we'll see whether we get a bounce and a move to new highs, which would certainly be nice before year's end, or if we fail and drop down to the 50, at which point it'll be an interesting thing to see of whether or not the 50-yard line, excuse me, the 200-day moving average will hold, or if we get a deeper drop. Take a look at where the action is. I like to look at sectors or industries. Let's go to, here we are. And as you can see in HTSI, which is the program I'm using, there's 145 different industries. And I don't really care what was working 3 weeks ago. So when I look at industries, I go to a 2-day force, which basically force is, sometimes the picture is easier to talk about. Force index equals volume today times close today minus close yesterday. You plot this and take a 2 and a 13-day moving average. And the 2-day force, therefore, is very much tied to price and volume over the last 2 days and not 3 or 4 weeks ago. And price and volume means you can be moved by a big price movement. It can also be moved by lots of volume. So things like diversified banks like JP Morgan, Bank of America, Citi are always right at the top because of their volume. So let's take that 145. If we look at 2-day force up, there's only 29. That's a really small number, although, boy, they looked exactly what the stock charts that I looked at. This fits very nicely, and I'll tell you about that in a second. Force down, the majority. So here's a sign of weakness compared to some of my more bullish thoughts about the market. Again, perhaps it goes to the fact that there's really, this market can go either way. Let's go back to the force up. So if I was thinking about going long this week, I probably want to go long where the action is. And one of the places where the action is in the steel index. And I went long U.S. Steel when I was at a recent meeting with Derek Pilger in his Magenta boot camp, and it went nowhere for a couple of days or a couple of weeks, and you could see so that steel had a 10% move. Cleveland Cliffs, which is iron ore, had a 15% move, and you could see big moves throughout. Let's just take a quick look at a couple of these. Now, these are bottom things moving up, so perhaps this year is the opposite of tax loss selling. There's been some suggestion of improvement in China, and that's probably what the big draw here is. And there's also been a lot of things, I think ArcelorMittal is the last one, of capacity coming offline. So when I look at this chart, and why did I buy this at the Magenta Traders Camp? So all my momentum indicators here are green. It makes money, but its earnings per share have been getting smaller, not bigger. I don't like that. However, I really like what I see on Friday, where we've, on huge volume, with a big kahuna, which is a very positive sign in our world, a pocket pivot, which is the blue line, gapped up, got above the 200-day moving average. You could see the group is going up here. This was a very bullish day on U.S. Steel. It'll be interesting to see, we'll look at this on a weekly, Just you an idea of how bad and how underperformed U.S. Steel has done over the last couple of years. And if it can get above this 50 weekly line where it closed at, it would not shock me to see it run up here to 36 or 38, which is about a 50% move. So I'm in this stock, and I'll probably give it some room to run. If I was getting back into it or buying it today, my hypothesis is that it probably pulls back, retests the 200-day moving average, and continues to run. So if I was to get into it today, I'd probably have my stop somewhere near the open on Friday. But the pocket pivot, the volume, the kahuna, everything turning green, very bullish. Cliffs Natural Resources is sort of a play on both iron ore and on coal. And the first thing is, if you're a high growth stock investor and you like to buy stocks that have been going up, this is not a stock for you. This is a bottom fish with a big dividend. And you can see it makes money. Like U.S. Steel, it's been slowing down. It's way below the 200-day moving average, clearly in a downtrend. If you look at it on a weekly, you can see how far this thing has come from. Up at about 100 with a double top here, down now near its lows. If you look at its other fundamentals, it pays a 7.4% dividend, which is, I would say, somewhere along the lines of not too shabby. And that might be part of why it's moving up. But rounded bottom here, it's going to have some resistance at the 50, and we'll see if you can't break through the 50. You notice the weekly bongo is still red, so not as much of the momentum story here, although huge volume coming in on Friday as well. Vale is a South American iron ore player. Looks a little bit healthier in that it's had a number of pocket pivots. Kahuna is going back a couple of weeks, has broken above the 200-day moving average, and that too might be a story on China, as that's a major, I think it's Brazilian, trading partner of Vale. And if we look here, it pays a smaller dividend, 1.6, trades at a multiple of 7.4, and again, earnings contraction, but still makes money. You can see the revenue has taken a hit as well. So no surprise, these are the leaders in the market right now. If you want ore, you have a choice of Cliff or Vale. If you want steel, I don't know why you look beyond U.S. Steel. I looked at a lot of charts. I like that one, probably the best of the group. Go back as part of top-down investing. What's the next hot thing? So I mentioned volume is a key component here. The 50-day moving average volume on Citi is 40 million. It's 153 million on Bank of America and 23 million on JP Morgan. Since in the calculation of force is volume times the change in price, you can imagine that almost every day these stocks are at the top of either the positive or negative list based upon the price movement. We'll just take a quick look at a couple of these. Here's Citigroup, and you can see a huge move off the bottom. That's probably, if not a 50% move, very close to it from here up to where it closed on Friday, 50.9% over 100 days. You can't argue much there. Certainly a leader in the marketplace. It's had a chance to pull back to the moving averages. It's certainly not extended. Everything is green. Pays a dinky dividend of 0.1%. Obviously, TARP issues and Warren getting into the finance committee can't be a good thing for this stock, for the finance stocks. Bank of America, a similar story, doing very well, all green, makes money, had a recent high, and JP Morgan also very attractive, although less than the others. It's gotten above the 200, going mostly sideways here. Historically, to me, this is always the strongest of the bunch, but you got to love what Citigroup has done and what Bank of America have. What else is in the list? Diversified metals and minings. Now, as I mentioned, silver and gold were weak. I mentioned that Cleveland Cliffs is both an ore and a coal play. what was China going to be good for? China's good for, if you're building in China, that means ore and coal to heat up to make steel. And if you're making housing, you need copper wiring. So those are the things that I would have expected to be moving. And you can see for yourself there's been a lot of strength. Now, Freeport-McMoRan, which I have a long-term hold on, a long-term position in this. And I got surprised on Friday, like everybody else, the week before, whatever day it was the week before, 10 days ago, when they announced a couple of strange acquisitions, big acquisitions, and I was trapped in the stock. I decided to hold on to it, and it had a nice move up since that point of time, and I think it's driven, one, by oversold, and two, by China. And it'll be interesting to see if it can make itself back up here to that 50, that 200-day moving average, where I think it's going to see some resistance. Rio Tinto is another iron ore, as well as other mining company based, I believe, in Australia. Pocket pivots galore. Another China trading partner, big volume. Another junk off the bottom play might be Walter Energy. Now, seasonally, let's take a look at Walter on a seasonal basis. And I'm not going to spend a whole lot of time explaining seasonals to you, except to say that several products, including Magenta Trader, which is what this product, will take a price performance over a period of time, and it will match up year over year over year over year over year to give you an idea of when things are seasonally bullish or bearish. So if you look at this yellow line represents the seasonality of Walter Energy. And if I look at plotting, it takes a lot of different curves and it comes up with an algorithm and bases the price change over time based upon prior performance. And you could see really it squeezes here and it starts to move up for the most part. And when you look at seasonality, whether it's a 5-year seasonality or 10-year seasonality, you could see that it's moving north here. And let's just clean this up and go back to price and seasonality. And when I look at this, I see a very bullish move coming in coal here, which fits where it's been moving before. And if I look at, just for example, predictions over between December 12th and the 26th of 10 days of movement, 8 days, or the next period of time, 10 years, 8 years up, 2 years down, up 7.8% average on the ups, followed by another move up of 8%. So really going into a strong period of time seasonally for this indice, or excuse me, this stock. And I think you'd find the same with the other coal stocks. So junk off the bottom, couple of pocket pivots. This is called a green candle low. And when I see a green candle low, I start to get interested in a stock that maybe has hit the bottom. And we'll see what happens here. My guess is it doesn't get much above the 200-day moving average. Back. Integrated oil and gas. The company, refiners, and you saw gasoline was up. Refiners are really going bonkers right now. And so some of these have refiners in addition to being a producer. We'll just look at these very quickly. Talk about one that's been a loser over the years after they made some big discoveries. I guess people realized how expensive it will be to develop them. Plus you got issues with the Brazil and nationalization. You can see a move off the bottom for Petrobras, probably not a place where I'd be playing because of what I just mentioned. Phillips 66 has had a huge run up, lower left to upper right, pull back to the 17. Looks like it's going to run again. Marathon on the petroleum side looks just like Phillips 66, a nice run up. And this is their refining arm, which looks even stronger than their oil arm. It probably should be moved under the refiners. So integrated oil and gas plays, mostly because I think the refining and marketing ends have had a very big play up, and are some of the stronger things I saw this weekend. Oil, gas, and refining, probably want to be owning something in here. With the price of gas up as much as it is, these are, when I went through my, I call it my bottoms up review, different than my top down, which is what we're doing here. Some of the most popular groups I saw were refiners. Here's Tesoro Petroleum. What's not to love here? Nice little cup. I don't really think it's a cup and a handle, but maybe a little bit of a handle. Maybe it's just a dimple in a more of a wider based saucer. Big pocket pivot up on Friday with a kahuna. Everything's turned green, makes a ton of money. This has been a leader. It's a leader again, and this is one that I might be looking to add to on Monday, especially if it opens up and takes out the high on Friday. Valero, very similar to Tesoro, nice saucer here. Looks like it's running again. Everything is green. Great earnings per share. Holly Frontier, earnings are less impressive as you go further out. It pays a little bit of a dividend, 1.7%, but certainly as a leader, lower left, upper right, it's had a very shallow pullback. Looks like it's going to run again. And you can pick almost anyone. Here's Western Refining, pulled back to the 17, running again. It looks like it's at recent highs as well. Great earnings coming in this quarter. And then one that was one of the leaders last quarter was CVR Energy. Still a great earnings per share growth. We looked at last week, rather. We looked at it last week, talked about it. Be nice to buy it on the 50, not when it's off on the 8 and kind of extend it. And that will be one of the concerns about some of these stocks, is they're probably getting to the point where they're getting a little bit extended, although Tesoro, because of this wide-ranging pullback, really looks like it's got a ways to go before it has that problem with being extended. So there's a couple of stocks and a couple of industries that look interesting. And like I said, gas has a lot of strength. Interesting thing, gas is up, but so is airlines. We'll look at United and Delta. I fly a lot, and these things are filled to capacity, which is probably part of why they're doing well. And really taking off number of kahunas and pocket pivots. This is United Airlines. Delta also looks the same. Some of this may be driven by the season. Some may be driven by the load. Some may be driven by the expected consolidation with U.S. Air and American Airlines potentially coming together. All right. Let's look at what's on the dark side. Force 2 days down. And pharmaceutical index was the leading thing down. See, I did notice that when I did my review this week, there were very few big pharmas that made my top list. There were a couple of biotechs, and we'll look at some of the things before we say goodbye. These are stocks that last week were leaders. So you wonder, are these in the midst of a dramatic change? And look at Teva, 1, 2, 3, 4. This is a 5-day reversal here at 42, all the way down at 38. You can see my momentum indicators have turned red. It had a pocket pivot down. Lots of volume coming into the downside. That looks horrible. Merck and Company has rolled over at the 50. So an ice hole failure. You'd expect to come down to the 200-day. See, I personally own Abbott, so let's see what Abbott did. Yeah, Abbott looks like it's getting into a bit of a squeeze here between the 200 and the 50 and the other indices coming together. Probably will take my profits on Abbott on Monday. Pays a nice little dividend if you own it of 3.1%. Now, what does that really mean? We'll see what it does on Monday. I've got profits in it, and actually I have calls with profits in it, so I've incentivized probably to take my profits and fight another day somewhere else. Semiconductors, broken record. These things have been weak forever. Sirius is one that I saw the chart got clobbered this week. Despite great earnings per share growth, it has just done extremely poorly. It continues to fall, and there's no reason to be owning these fallen knives. All right, I'm getting a little tired. It's gone longer than I thought it would. Let me look at a couple of shortcuts and then my buy list, and we'll say good night. As I've talked before, one of the things I like to do is a group inclusion filter, and I'm not going to do it today. I'm just going to show you the results and take a look at them very quickly. So I looked at this time for just the top small number. So let's see where I put it here. So these were the top 8 from my group inclusion filter. So they ended up in a lot of what we call smart groups as being strong stocks of the day. Let's take a real quick look at these, and then I'll look at a couple other things and say goodnight. Regeneron has been one of my favorite stocks, pulled back a little bit to the 17, great earnings per share growth. This is a leader. I expect to continue to be a leader, and it's not overly extended. It's something I'd like to see a reason to buy it. I'd like to see a pocket pivot to give me a hint that it's about to go up again. Perhaps we'd see something such as a kahuna. So I'm going to wait for a signal, but that's clearly a leader with a mild correction. 3D systems, a lot looser than the last chart, makes money, pulling back to the 17. It made a lot of lists, and I'll show you those lists in a second. We'll take a look at some of those. Not that excited by it. Trimble Navigation, nice move up here, pull back to that 8-day exponential, makes money. Most of my indicators are green. Could be a place to bounce. Be nice if you can get it down to the 17. Hertz Global, pulling back some, because a couple of dojis in a row day. Yeah, these do not look nearly as exciting than the ones I did top-down investing. Newstar is not a steel company, it's a data processor. Nice little run up, 3-day pullback. Again, not surprising that these don't look great considering that the S&P 500 had a less than outstanding run over the last week or so. Financial Engines, nice run up, pullback. So these are the stocks that I call my GIF All-Stars. Alaska Airlines, a very strong airline stock. And what I basically did here is what comes with HGSI are a number of pre-run for you searches called smart groups. And in these smart groups are things such as pocket pivots, and then stocks that meet certain criteria. And so using a thing called the group inclusion filter, it's possible for you to pick out which pieces, which stocks had the best performance over time, and allow you, when we pick up, allows you to pick which stocks make it to the most of the lists. So for example, let's do it real quickly and show you how I do that, because I think it's a really great tool. Group inclusion report. I'm going to clear all. You see I did one earlier. I'm going to go into smart groups, and I'm going to pick Rousing pocket pivots, and I'm going to pick best criteria, ERG 240, growth, HGS 100, leaders under leaders, and then the next two here, quarterly EPS acceleration and strong EPS. I'm going to make a group from the list. I'm going to put it in AAA, Web, Gems. Take 20 stocks. I'm going to hit OK. And what it's doing is it's finding which stocks are in the majority of the lists, and it's going to rank them. So it shows me that Meritage, which is a housing stock, Virgin Media, Cedar Energy we looked at, Regeneron we looked at, that these were the stocks, Holly Frontier, that made it into most of the groups. And so very quickly I've created this list, and I can go into my user group here, and I can see the web gems are thrown in here, and this is another place that I could fish. I could fish just by looking at some of these groups, such as best criteria, a lot of the stocks that we talked about. The other thing that this program does is it does these things called views, and in a view it takes a filter and then it ranks them. So one of my favorites comes from my good friend David Ghilardi, which is called sprinters. And these are stocks historically that demonstrate great technical and fundamental characteristics. So all I really could have done is done sprinters, and you would see a number of the things that we looked at today on the refiners right up at the top. So when I did my bottoms-up review before I came in today, I came up with a buy list, and I'm going to close on that buy list. Let's just go look at all of them. So the first thing is, here's what, as I've talked about, in this business about coal and China. First of all, oil, gas, refiners were all over my buy list. I'm not going to buy 8 of them, but I'm probably going to buy 1 of them. And I remember this Marathon potentially is more of a refiner than an integrated oil and gas play. Construction and farm machinery, Joy Global, Manitowoc, Trinity, and Wabash are probably China plays. They have a lot of coal work, and there's a couple of them that I might be interested in next week. I don't have a lot of housing stocks here. Meritage was one of the, probably the strongest that I saw, but I have a lot of housing-related plays, such as Louisiana Pacific, some of the wood, Eagle Materials, construction materials. Some of these are a play into housing, and Cons is a play into appliances and electronics. There was some biotech interest I had, but most of these were on pullbacks. And then I have something called bottom fishing. And, excuse me 1 second, I think my wife just locked herself out. Hold on 1 second. Sharon, he just ran in the hall. I thought you were outside. What happened? I thought you were not because you were in the hall. You ran inside. Sorry about that. I misheard something. I opened the door and my little dog thought there was somebody out there. He went running. So I'm going to get ready to finish here. The last thing I do is that I then take my stocks that I liked and I put them into different categories, and I'm going to say goodnight after that. Oh, let's see here. Sorry for that little interruption. So just a few more comments. These 2 refiners, Tesoro and Valero, I like a lot. Manitowoc makes some construction in the coal industry. These are stocks that are not overly extended. This group here, and you can freeze this page and write them down if you actually care to. This group here, and I don't like what I just did there, I'm sorry. This is a group of stocks that are extended, but represent some of the strongest in the market. Again, you see refiners. I like pullback stocks historically. These were some of the pullbacks that I think are ready to run. Take a look at Jazz. It's got earnings per share growth. These pullbacks waiting for signals are stocks that I think have a opportunity of turning it around. And I'm waiting to see something come in like Volume, a Kahuna, Pocket Pivot. And bottom fishing are stocks, and I'm going to take a look at HMSY and say goodnight, that I think are showing a reversal, kind of like U.S. Steel did. And we put HMSY up, and here's a stock. This is not a growth stock, but if you're looking for a quick pop, deep pullback, Kahuna came in volume, got above the 50, and there's no reason why this doesn't run to the 200-day moving average, which is about another 15, 16% of a move. So it'd be something interesting to watch. Lastly, I want to comment on something I talked about on the board. Ariad Pharmaceuticals, I know this company well from the type of drug that they have. It just got approved on Friday, and let's go into a different chart. And it dropped after it got approved. And I went on the board and said that there's actually a buying opportunity here. And I still believe there's a buying opportunity. And what you could see is somewhere around 12:30. This is interesting. Oh, you can see how the stock originally traded up here at 24.64. Here's your red candle high, and it sold off hard. Now, I got back into the stock here. I wrote it up for about an 8% gain. I also bought some calls back when it pulled back, $20 calls. I sold my stock, and then the stock has pulled back down to about 19. This is a blockbuster drug approval. There was a surprise thing called a black box warning. I made some comments on the board about it, which is why the stock pulled back. I still think this is a very interesting stock, and I'm glad I've got my $20 calls for January, because my guess is it's going to go up there and make me happy again. It's pulled back to the 200-day moving average, which might be a nice place for it to jump. And as a physician who treats patients, that black box warning is something I would always pay attention to. But my guess is that it's not going to keep somebody from writing for their drug. So just a comment on a suggestion that I put on the board, and you had to be quick to take advantage of it. Good night, everybody. Have a great week. I'll see you again next week. Thanks again. Jeff Scott here saying have a good week trading. Trade the market we get, not the one that I said we might get or I want to get. And you all have a good night and safe holiday. Thanks.